Well, I don't think anything good has come out of it. If you look at what they've gained from going through this process, they've gained multiple class action lawsuits, an SEC investigation, and a share price that's lower than when the original tweet came out. So my point is that from a leadership perspective, I think what's becoming clear is Musk is a great visionary and maybe not the right person to take Tesla to the next level. Is these distractions are certainly going to impact the company's ability to grow.
Well, that would require, to a certain extent, a board of directors that's perhaps less compliant than the current one. I think that's probably asking a lot, don't you?
Sure, I do. But, if you look at history here, I have the utmost respect for Elon. I think that he is, frankly, one of the greats. And if you look and go back in history, there's precedents here where some of the greatest visionaries, such as Thomas Edison, for example, weren't the best or the right people to really take, in Edison's case, to take General Electric into the future. In fact, his own idiosyncrasies and eccentricities really allowed J.P. Morgan to come in and take the business out from under him. Now, I hope the same is not the case with Musk, but I think that what he has done is phenomenal in terms of developing and bringing the transportation industry forward. But as you see in our note, we talked about the announcement by Toyota Motor Corp making the investment with Uber for autonomous vehicles. What I wonder is whether or not Tesla's own distractions will limit their ability to get into the right deals and be well positioned financially to make the right transactions to ensure that they capture the industry that they're really pioneering.
Jed, assuming there is no decisive change at the top, let's say over the next several months, and they don't have any strategic investor come in there, you're left with the operating challenges and the financial challenges in front of Tesla. You mentioned that you think the company has to get to a point of profitability by year end to remain financially solvent. How do you define profitability there? What's the company's options on that front?
Yeah, what we're speaking to is in terms of their cash position. They have $2.2 billion in cash. The burn rate's going to largely depend on how successful they are in terms of meeting their targets on the Model 3. They are coming up against, given where the stock price is, if the stock price were to rise, then that gives them a lot of leeway because they have some convertible notes that come due this fall as well as in the springtime. And so they will have an ability to likely refinance that, but based on where the metrics are, that provides some level of risk to them. That's what we meant by that.
You're not alone, it would seem, Jed, in sort of suggesting this idea that he would benefit from a strong leader, a COO type, or even a CEO, and if he became executive chairman. But if history's any guide here, right, hasn't he lost a lot of people who were fairly senior over the last 6 months? Certainly the shorts like to point to that, but is it a significant risk as well?
Yeah, I think that he can still make the decision and make that change.